Hello traders, welcome back to your channel The Traders Flight. So let's begin today's weekly analysis, and its weekly analysis will be analyzing daily analysis as well, which is today. This is Monday. So without wasting time, let's begin. And if you're new to this channel, do like, share and subscribe, and do not forget to hit the bell icon so that you'll get the analysis videos on time. So let's move to the monthly time frame, though this is a weekly analysis. So the monthly time frame, I don't see a major change. It's still same. It is kind of this area is the historical resistance area, and market is well respecting that area, and we have seen multiple impulse, and after that there is a 50% retracement also happens from the similar area, and this is the third time market is testing the similar historical resistance zone. And as expected, because though it's a historical resistance zone, sellers will be more active and they will sell the market at this zone, and that's why we have seen there's a big wick, this monthly red candle, right? So pretty much the picture is same. This is the historical resistance area, which is 2070 to 2075 zone, and let's move to the weekly one. So in the weekly time frame, we have seen after the impulse, it went down and then again took this 50 EMA support and went up, and after that, after the impulse, we saw it is moving kind of a ascending channel, and ascending channel is kind of a exhaustion pattern as well, as we have seen, and that's the reason why, and it is also kind of touching the historical resistance area. That's one of the reason why more sellers are present at this area. And when it's broke down this channel, which is this one, and it fell down to this support, which is present at this 1925-26 area. So after that, what that we'll see in the daily time frame, and that will be a very interesting one. Okay, so the daily time frame, we have seen market went down once it broke the channel, and then it is trending kind of in a range. Let me just little zoom up this chart. So currently, if you see, market is trading in a range, so that means we can say the buyers and sellers, they'll be, it's kind of a like they are fighting, right? And it's kind of a range bound movement is happening. It is not a very trending movement, I can say, in the gold chart. So if you see, the ranges are from 1985, now the new low it made 1925. That's the range where market is moving, right? So in the daily time frame, it's still range bound. There's no major changes, I can say. It's all we have to trade based on our levels, and to draw the levels, let's go to our favorite 4-hour time frame. Okay, so as you're seeing, these are the levels that I have drawn. So this is the resistance area. I can say it's a strong resistance area as of now, which is 1985 to 1980, and the support at present it is 1925, right? So this is what we are seeing as of now. But if you see, let me just zoom up a little bit. If you see this one here, it is trying to form a head and shoulder pattern, right? It is not completed yet, but market is trying to complete the head and shoulder pattern. And if this happens, if there's no breakout happen above this zone, which is 1960, then we might see some downfall till this level, which is 1940 around, right? So we can take a sell entry if market breaks this 1952 zone and then retest this area. Then we can see a fall of 10 to 15 points, and we can easily capture 1939 or 40 area. This could be a minor support as of now for the market, right? So for better clarity, we can see 1-hour time frame as well. In 1-hour time frame, pictures are pretty clear, right? the head and shoulder pattern that is visible in the 4-hour time frame, it is looks pretty clear, and market is trying to, this is the shoulder and this is the head, this is the shoulder that is currently forming, right? So in the 1 hour time frame, which generally I follow for intraday, 1 hour and 15 minutes I generally follow for my analysis and all. So in this 1 hour time frame, we can see it is forming a head and shoulder pattern, and when it's break this zone, probably 1954 to 52 area, we can take an entry of sell position and we can trade till 1940 area. And then if it breaks 1940, then we can expect again it will go and take the low support from this low, which is 1925 area. So in that case, if market breaks above 1960, we can take a buy entry, and it will be the high of 1967-66, and if it sustain above 1970, then we can take some buy trade till 1980-82 area, and 82 to 85 is the major resistance as of now for the market. We can look for sell side from the major resistance areas. So I thought, why can't we introduce one more COT report. COT is something like a commitment of traders, and that will give us the detailed future positions of commercial and non-commercial, or the retailer long and short positions, and it will give us an idea like what all these big players or big institutions they are taking the position as a long side or short side, so we can predict the market on that direction. Though I'm saying nobody can predict 100% the market, but at least these are all probabilities, right? We can draw our probabilities, we can draw our levels, but it is all depends on the trader, because as a trader you should be reactive, because we have seen though there is a support, and during the news market went down, and from the support area it went up, and technicals and fundamentals we have to take both during the news time. Sometimes technical fails but fundamental works, so that way we have to analyze the market. So as per the COD report, if I see the non-commercial, big non-commercials are like the institution players, and also if I see the long positions are more than short positions, so we can see some movement on the upside if the positions are not changed. But if you see from here, it's saying long for the non-commercial, longs are reduced and shorts are added, but which is really opposite to the commercial longs are like added and they removed major shorts, right? So we can see there's a big fight going to happen this week, and whoever won the match will see that direction gold is moving. Another case, if you see the DXY, if I see the past, it is kind of going as a lower highs and lower lows, right? So it is kind of a downtrend as of now, and today is, I think there's a bank holiday, the Monday. Let's go to why it's showing the old chart. Today is 19th. Let's see. All right. So today, all US day, it's a bank holiday. So if bank holiday is there, then we might see less volatility, and though we have less volatility, this DXY will try to sustain and hold its base, which is 102 area, and if it sustain this, then we can see some more downfall from the gold. But let's say in case this week if market or the DXY fall below 102, then we might see a good bounce back in the gold chart. So keep following both the charts, the DXY and gold, and based on that you can take your entry and exit, right? So note down all the levels. You have to enter buy trading above 1960 for a 50 to 60 pips, and we can take sell entry below 1952 till 1940, and below that we have a low which is 1925, and above 1966 67 area, or I can say 70 72 area, there is a major resistance present on 1983 to 85 level. So watch those levels and draw, and then based on take your trades. So that's it for today. Thank you everyone. Happy trading. Bye bye.